It's the start of another exciting trading week, and Jose joins us on the line to talk about potential sterling, yen and dollar drivers, so keep watching. Our good friend Jose is joining us on the line from Ireland. So Jose, UK GDP is released this week. Now the beginning of the year saw UK's GDP figures as the worst performing in the EU. What should investors look for from these figures?
The GDP figure expecting close to 1.7%. Now, what investors must look here is stability. What exactly is the current condition? Is the economy healthy enough to go through, to endure the Brexit negotiations? That's what we're looking here. I will say first, we take a look at if market comes as expected. That will be okay, nothing spectacular, and we'll give you hints to expect something that is pretty decent. Now, what you must be aware of, if we have a reading that is slightly 0.1%, that could be something that can be a sign that there's something to be considered, and investors will have to adjust right away. We're looking at the charts right now, and one positive figure for all investors, traders, our audience that is a mix of investors in the long term and short term traders, we have to look at the weekly chart, and that's where we have to find, we have so far evidence, and the 50-day moving average comes to provide support around the 126.40, 126.50 region, which is the critical support right now in what has been the recovery story during 2017. Mainly not because of the strength of the UK economy. We have to, it will be to be considered a factor, the position that the new US government is playing, that is had provided the opportunity for the British pound to take off and actually move as close as 132 for the year to date.
Now the Central Bank of Japan is expecting inflation to be at 1.1% for the fiscal year. Is Friday's inflation figures realistically set to be in line with expectations?
Now, if we look at the American dollar versus the Japanese yen on a weekly chart, a couple of things first from the technical perspective that all investors and traders must consider. First, you want to take a look at where are we exactly in the game of bullish or bearish. We're trading below not only the 50-day moving average, but also we're trading below the 100 and the 200. That is something to call cautious. This is something that you want to pay attention. Now, needless to say that 1.1 is not exactly a relatively standard figure when it comes to most central bankers looking to hit 2%, even 3% in some cases, if you think about it. But what it is right now is the high level of uncertainty. With a tweet from Trump or a couple tests from North Korea, things have changed, and investors are not really experiencing that booming opportunities in fixed income. Now, coming back to Japan, what you have to consider is that this can be a revaluation of their economy, and 1.1 it doesn't strike at something that is magnificent, but based on everything that is happening in the world as it is as economy, I think it comes to be something that is decent. And if that figure comes to fruition, what you're looking at is a possibility for a further yen appreciation. Now, like I said, on the technical base, just looking at one example, one currency pair, which is one of the bread and butters for traders and investors, the American dollar versus the Japanese yen, you do see the opportunity to at least another 250 pips to the downside. That means, in basic English terminology, is that there's more room to go down. And I will say that is an extremely good opportunity. I will say that after August, looking into September, beginning of October, then we'll think about some sort of less strength in the Japanese yen environment.
Finally, moving on to the dollar, so there are no evident catalysts for dollar to potentially rally this week. Could we see another week of dollar decline?
The question is, we are already in an oversold position. If we look at the charts, we're looking into, let's take a look at the weekly chart, which is the one that matters the most right now. If you think about it, Jessica, if you see this, actually the green line here is the 200 moving average, and we're already below the 50, the blue, and also at the 100, the red. This is just talking about technicals. What you want to keep an eye is the fact that, first, there's nothing right there on the fundamental spectrum. We already know the Federal Reserve is so concerned about inflation, which is the topic that everyone has to pay attention right now. What's the deal with inflation? There's no inflation in the Eurozone. It seems it's palpable how weak it is in the US. So all the members of the Federal Reserve have been concerned, has been expressed in this issue, and this is why there is a have held their movement into the continuation of this hike pattern and pushing all that way through December. Now, banks as ING Research, they do think that there's still some room to experience one more hike in 2017. That will be in December of this year. Now, of course, you have to think about how's that exactly is going to happen. You have an excess when it comes to subprime auto sales. That's one issue in the US that is affecting. You also have a sort of messy new US administration, and all this, the lack of a new tax growth package, stimulus, actually affected the expectation in 2017 of having a dollar index, a strong dollar. So we have to think that right now we found support so far in the weekly chart near the 200 moving average on the weekly chart, and that's what's holding. Now, could we go lower? If we take a look at the weekly chart, then we know there's a lot of room, and easily prices can slide to the 90, 40, 90, 60 region. And that's something that we cannot deny. If there's no support from the Fed or no adjustment in the inflation outlook, expect another crash in the dollar. Thank you. Have a great week.
Well, Jose, as always, it's a pleasure. Thank you so much for your insights. Well, that's all from us, but don't forget to keep clicking back throughout this trading week.